Well, this video is out there for anybody in California. So if you're in California and you need help when it comes to buying your first house, you just don't have the money. Did you know there's possibilities of getting a grant for your down payment and then another grant to help you with all the closing costs? So virtually you won't need any money down. So you still want to have some money put away in reserves and things like that, because when you buy your first house, you never know what might happen. But I have a fantastic program to go through with you guys. Now, this program is available through conventional and FHA. Just keep that in mind, because the other down payment program that we have that's basically free money is only available for FHA. So let's get over to it. I want to show you guys what this is all about. So the first thing we want to do is go to the definition of what she is a first-time home buyer. Well, basically the definition that they go by is you cannot be vested in a home or any ownership of a property in the last 3 years. Okay. So if you've never bought a house, you're automatically a first-time home buyer. But if you bought a house in the past and you've been off of the title or the ownership of that for over 3 years, you're still deemed a first-time home buyer. So that is that piece of the puzzle. So that is basically what a first-time home buyer is. Now, the property requirements, let's go through this. I'm going to put my glasses on. I memorized most of this, but I can't go line by line. And I want you guys to know all the information you need to know about this program. So in general, here's the property eligibilities. Obviously, you have to live in California, or the property has to be located in California. You have to be a resident of California. The house must be zoned in a single family occupancy zoning. Okay, so you have to check that. The house must be a single family home. You can't be a 2-unit, 3-unit, or 4-unit building. Home can be a condominium as long as the condo is FHA approved. So what happens is when you're looking at a condo, just check with the association to make sure it's FHA approved. A lot of them are not. So don't be, okay, I found this place and it should go. So a lot of them are not, unfortunately, but check that out. You never know. The next thing is it can also be in regards to a PUD. All right. You can use this on manufactured homes, but like our other program that allows single wides, this program, it cannot be a single wide. It has to be a double wide manufactured home. And there are some stringent requirements in regards to that. So if you have a manufactured home, now, those are one things we'd ask you to call us to set up a consultation so we can go over all the information to make sure we're pointing you in the right direction. The next thing is we want to go over the two pieces of the puzzle. You can do this program. It's called Cal for California plus conventional. So with the Cal Plus, why you need to go with the Cal Plus is because it'll offer you the 3 other options, or the 2 other options, where you can get down payment assistance as well as closing cost assistance. So let me break this into a couple little buckets. When you're buying your first house, there's the amount of money that you need for your down payment. Okay. So a lot of times think, okay, I have the down payment, I'm good to go. Well, no, you're not. In most cases, it's going to cost you probably $4,000 or $5,000 additionally to go through all the channels. This is going to cost you for your appraisal fees, maybe your attorney fee. If you have an attorney fee, you're going to have legal fees, you're going to have recording fees, you're going to have a bunch of other extra costs. There's no one particular item, but there's a bunch of little, nuances, costs involved. So you need to have money for your down payment and also for the closing costs. And this program is going to take care of all that for you. And we're going to show you, train maybe even your realtor on how to get involved in these programs. So let's go to the conventional loan first. So in the conventional piece of this puzzle, I'm going to go through this verbatim, and then I'll just give in my 2 cents there. It comes with a fully amortized 30-year fixed rate. You cannot do an adjustable rate or a 15-year, 20-year, or 25-year mortgage. It is a 30-year fixed rate. This loan is in combination of ZIP. What ZIP is it helps you with your closing costs. Okay, so ZIP is a 0 interest % rate loan that you're going to get to cover your closing costs. My Home is the down payment assistance program. So hold tight. I'm going to go through all this with you. So what we're going to talk about is Cal Plus Conventional and Cal Plus FHA. So basically just think of that as a California conventional loan, okay? Or a California FHA loan. And then My Home is down payment assistance. So that's going to be another grant that you'll be eligible for possibly. So that'll take care of your down payment. And then what about those pesky closing costs? Well, that is the ZIP. ZIP is a 0 interest loan that would be granted. And it does come with, you don't have any payments, but there is a balance there that you have to pay off over time, either when you sell or refinance the house. But it's going to provide you all the money that you need for, again, the down payment and your closing costs. Virtually no other program out there is like this. Okay. The zip second is only available with the Cal Plus. So again, you have to do the Cal Plus conventional or FHA to be able to get the zip. Again, the zip is your closing costs loan. Is a silent second means there's no payments due or anything. It just sits on your title and needs paid off either when you sell the house or you refinance the house. You can do either a 2 or 3% loan based on the first mortgage loan amount. Okay, it's not the appraised value, it's not the purchase price, it's the first mortgage loan amount. The interest rate is 0. The payments are deferred on the first loan until the house transfers the title. So basically, if you sell the house or refinance or do something like that, you have to pay off this loan. So it's not free money like the other program we have, but this will get you into a house, and it's virtually free money because you're not paying any interest on it. You just have to give it back. The Cal Plus may be combined with My Assist. So you see there, you're going to get the My Assist, the caption at the bottom, to give you the closing costs or the down payment, and the zip for your closing costs. That's where I usually got really confused when we start offering this program, and I really wanted to clarify that for you guys. So virtually, it's going to be 3 mortgages on your home that you're only going to have to make payments on 1. All right, borrow requirements. Occupy the property is your primary residency. Non-occupant co-borrowers are not allowed. They are not allowed. The CalHFA borrowers must complete home buyer education courses and get certified. You have to meet the CalHFA. I'm just going to say the Cal conventional. Loan limits. In the case of conflicting guidelines, the most restrictive guidelines are taking place. Okay, now the property requirements. Be a single family, 1-unit property. You can, in some situations, have maybe a guest house or granny in-laws or something like that. That's going to be on a case-by-case basis, but we're really looking at a 1-family dwelling. Condos must meet FHA guidelines. Manufactured houses are permitted, but again, remember, double wides only. You cannot do single wides like you could on the other down payment assistance program that we have, and I'll try to reference that up in here and down below in the description. Leaseholds and trusts are not permitted. So let's go to the next screen. Bottom just says if there's any conflicting like gray areas, they're going to lean on the side of caution when they're underwriting these loans. Here's a breakdown. This probably doesn't do you much, but the cool thing here is look at the breakdown here. You can see the lien position right here. It says first, second, and third. So that validates you can get a first. Then with My Home, you can get the down payment assistance as a second. Then you can get a zip loan for your closing costs as a third mortgage. And again, these 2 mortgages you do not have payments on. There will need to be paid back at some point. And then goes through some restrictions on what credit scores are required. You need a 680 credit score to even get on the board. And you need the higher your credit score is, kind of the better the terms are. So I won't get into the weeds in this one too much, but yes, we can do all 3 of these liens for you at one time. Conventional FAQs. So these are questions that most people ask. So these are the answers to those. So let's go through a couple of them just so you guys understand the backdrop of a lot of this. Are condominiums eligible for the conventional loan program? Yes, but they have to meet Fannie Mae guidelines. So virtually, if the association is FHA approved, you're good. If it's not, you're probably going to have some issues. What automated underwriting engines do the conventional programs go through? They go through Fannie Mae, which is, we reference it on this side, is DU. So most of you guys aren't, it's not relevant to you out there as a borrower, but if you're in the business, you know what DU and LP and approved eligible and all this other stuff means. We run you through the Fannie Mae website. We have to get an approved eligible status on your loan. A lot of times what happens is if it gets a refer, you can do what's called a manual underwrite. So you can have compensating factors that might be able to get you approved for a loan. But in this program, it is no. It either approves it through their system or it is a no-go. Do all borrowers need to meet the minimum credit score for this program? Yes, they do. In most cases, you only need, 1 borrower to fit in certain situations. But in this one, you do need all borrowers to be at a minimum credit score that is required under this program. Can you use non-traditional credit? Like, can I prove that I've made my insurance payments for months, my cell phone bill for months and so forth? No, unfortunately, you can't do that with this program. Then the next page we're going to go through is continued FAQs. So here is one parameter that, again, these are things internally for us. I don't anticipate you guys understanding a lot of this. I just want you to know that there is help out there for you, but just, and how important your credit score is. So in this case, look at it. If your credit score is 700 or more, you can actually go up to a 50% debt ratio. If it's 699 or lower, down to 680, because that's a minimum score, you only can go to a 45% debt ratio. So that might make or break you buying the home. And then, is a manufactured home eligible for the conventional loan program? Yes. Manufacturer's home are permitted per Fannie Mae Mobile Home Advantage and Mobile Fannie Mae Standard. Single wides are not eligible. Fannie Mae Desktop Underwriter is DU. That's what we use to get this done. Max debt ratio is 45. But again, if you have a 700 or more score, look up top. You can go all the way to 50%. These properties are not eligible. And let's skip the last one. So let's get to the next piece of this puzzle, FHA. So I'm going to skip the Cal plus TAFA, HUBA. I'm just going to say the California FHA program. So let's get over to that. It is a 30-year mortgage that you can combine it with the ZIP program. Look right here. The loan is combined with the California ZIP program for closing cost availability to cover your closing costs, as well as the My Home, which is your down payment assistance program. The ZIP comes with a second lien for 2 or 3% of the first lien loan amount. The percentage rate on that is 0 and needs to be paid off only when you sell the house or refinance or you're coming off of title to the property. The next thing we want to go to is some of the guidelines behind this. Highlights: occupy the property as your primary residency. Non-occupant borrowers are not allowed. And again, usually on FHA loans and in other FHA programs, they are allowed. In this program, they are not allowed. Any borrowers must meet home buyer education counseling and obtain a certification of completion. It's pretty simple. It'll take you 10 or 15 minutes to do it. And I can almost assure you, you're not going to fail. Property requirements: single family homes, 1 unit, including approved condos and PUDs. Guest homes like granny homes and stuff like that may be eligible. Condos are also eligible if they are FHA approved, the association. Manufacturing homes are permitted as well. But again, this program does not allow single wides, double wides only. Lease properties are not permitted. Next puzzle we go to. This again is the matrix. You can see all through here, and you can see that the credit scores in this category start at 660, where FHA loans really start at 580 for the minimum down payment. You can go all the way down to 500. But in this case, they want a little bit higher credit scores because they're basically giving you almost free money to buy that house. The next piece of the puzzle we want to go to is the FAQs. What questions do most borrowers have when it comes to this program when they're looking at FHA? Well, my borrower is not a first-time homebuyer. Is the borrower still eligible for the government loan program? No, all borrowers must be first-time homebuyers. All buyers. So if you have a co-borrower, they also have to be a first-time homebuyer. Does CalHFA allow subordinate financing, mean other financing other than the primary loan? Well, yes. You can actually you can see on the screen, My Home, which is your down payment assistance program, and also ZIP, which covers your closing costs. And again, that is another lien on your property. Are there any price limits? Yes, there is a price limit on FHA products, and this price limit is based on the California guidelines, and that is $1,068,000, and that's the loan amount. Can you do high balance loan limits with this program? So, are high balance loan limits allowed? So basically, you cannot exceed the $1.068 million loan amount. The next piece of this puzzle we want to go through. And guys, if you have questions on this, you can pause the screen, replay it, or click down below and schedule a meeting, a one-on-one consultation with us so we can answer all these questions for you. Go over a little bit more FAQs for you. Is a manufactured home eligible for government programs? You betcha, but single wides are not. And here's the guidelines behind that. Minimum credit score is 660, debt ratio is 45%, and you need to get that DU approved eligible. So when we run it through Fannie Mae, like the other ones, you have to get an approved eligible. Is a manual underwriting permitted? Yeah, but I very rarely have seen a manual underwrite actually get through. So let's work on getting your credit scores up and your debt ratio in line to get you qualified for this program. So let's keep moving on. More FAQs. What is the max DTI on these programs? Well, if you're familiar with FHA, you know FHA will go up to a 56.99%, what we call the debt ratio. What your debt ratio is basically debt to income. So let me explain it for you real quick. Your debts is in this line here. It's all your debts that show up on your credit report plus your proposed mortgage payment divided by, so debt to divided by what? Your income, because it's called debt to income. So we take your gross monthly income, that's the income before taxes and everything else, and we divide that through, and these are factors you're going to get. So if your factor is over 50%, you got some working to do. If you're down at 43%, you should be okay. So then we can go through a whole bunch of other things. But we do pull a tri-merge credit report. You only have to really have one valid score to qualify. And those are also things that we can help assist you with. We'll go through some more. Let me just go through here. Can I use non-traditional credit for this program? No. Do all members on the loan have to actually meet their minimum credit score requirement? Yes. All right. And then the next thing is we only have a couple more screens to go. My Home Assist program. So remember, what the My Home Assist program is helping you with your down payment. It's going to give you money to cover your down payment. So what that consists of is it's a deferred payment, simple interest, and it's subordinate. So meaning it's behind your primary loan. You don't have to make payments on it. You really don't have to do anything. It's just a lien that sits there until you get removed or your title work changes. Let's go over it. The FHA piece, the minimum amount is 3.5% because that's going to give you all the money that you need for your down payment. And the conventional one will give you 3% because on a first-time homebuyer programs, you only really need 3% down. And then let's go through. I only think we have a couple more slides to go. Underwriting compliance. You guys don't need to know anything about the underwriting process because we know it all at this point. So let's recap this program for you. So we're going to go through. And the first thing we want to talk about is those in California that really don't have any money for a down payment and even any money to cover your closing costs. This is the program for you. So if you want to find out if you qualify, if you're eligible, and for how much, all I need you to do is go down below and click schedule a consultation. You'll have a one-on-one consultation with me or one of my mortgage advisors to put you guys in the right space and answer any questions that you might have. So thanks so much as usual for watching. God bless, folks. Don't forget to subscribe down below and check out my other videos. You might find them very useful. Take care, folks. See you next time. Bye-bye.